Hey guys, what is going on? So it's been a while since I made a last video. I missed yesterday. Well, it was actually intentional that I missed it because I was going to film it, but I just wasn't feeling my best. Hence the reason, even on Monday, I wasn't really feeling my best, and I think that's why I kind of had an issue with the audio. I wasn't really checking these things, and I've come to a realization now that if I'm not feeling 100%, I'm not going to release a video. I was being consistent before where I was just releasing them every day, as you can see, but I think I'm not going to be doing that as much anymore. I know that it brings a lot of value to the table, but I think most of all, I kind of want to spend some more time now just focusing on myself and really just kind of develop. I think it's now the time for me to kind of just move up and scale. I've got some really good bits I want to share. I've been reading a lot of books. Obviously last couple videos I went for a few books: Atomic Habits, Thinking Fast and Slow, Side Effect, Think and Grow Rich, The Chimp Paradox, and Start With Why. And essentially, yeah, I just wanted to kind of, spend more time developing my own skills, abilities, and mindset before I start coming back and giving you more advice and stuff, just because I can see myself evolving a lot. And I think mainly because of those evolving steps that I'm going through, I think it will be a lot more beneficial when I do share things sub-frequently than frequently, because there'll be more value in it as well, and I can take more time to kind of prepare and give you that information. This week's been pretty good, to be fair. Obviously I have taken a 1% loss. It is what it is. It hasn't been the best of weeks, but to be honest, for me it's been quite phenomenal. The markets have been very good. I missed around about 28% in positions just because I've got some family that's come over to Greece visiting, so I've been consistent with my routines. Just there's a few things that I've not been able to complete fully, and I think because of that as well, it kind of just obviously supplements the time. So it's completely fine not to do everything in your routines, but it's important to have a routine and to actually try your best and make sure you keep basically doing everything you can do in order for you to actually reach your goals. So this was a really interesting one, and it was fully anticipated. It was just one I couldn't quite take the entry on. There was perhaps maybe a candlestick confirmation up here. Couldn't really get it. I wasn't interested in taking such a high risk entry. There was the left shoulder, head, right shoulder. I love these head and shoulders on GA. They come every now and again, but when they do come, they turn out to be really nice. So that was basically it for GA, where you just had the head and shoulders. Right now I would be anticipating this larger flag. When I say larger, I mean, this could shape up in the next 5 hours. So knowing that it could take around about 5 hours, lead us into maybe towards the end of today, London session around about 5-6, I would say, we could stay sharp for that, and this could shape up to be good for the sell. Next one is obviously Euro USD. Euro USD still, we've broken above. We did get this sort of 1, 2, 3 in this push away, which in some ways is quite a nice sign, because it shows us that from here that people, if we were going to sell off, we would have just dropped through. But at the same time, we need to see more commitment now. So I'm just kind of looking at it over here on the 15, where we can see that equal spacing, we've moved into it, we've aggressively pushed away, and then correlating that with the DXY, it makes a level of sense, right? Where we're seeing, however you want to draw it, doesn't really matter. More so, will we kind of just create this to just sell off, and then Euro USD continues higher? We'll have to wait and see. I'm still not crossing off the board though the possibility that we can impulse up. We'll still correctively squeeze and then have one big push and then correct and then move to the upside, because we are still in a very interesting area where we could be catching people out on the wrong side. But ideally I would be looking for that retrace. This stalling stalling in this area, so many words going through my head, essentially could just be price accumulating for a further move to the downside. Although looking at that big move, I wouldn't take a position based on that small size flag to the downside, only because I would be looking for something a little bit larger to kind of, back this up. I mean, I'm not saying this is impossible, but I'm saying I would look for this to correct a little bit more, maybe get a bit bigger, and so forth. So I'm still quite interested to see if this goes long. JP225, It still looks like one big corrective wave. I don't think I'm going to be eyeing up this head and shoulders anymore. I think that's more than, you know, enough to just kind of say we could be in this sort of corrective state now, where this looks very interesting, where this could just potentially push up higher. But there is that aspect of the head and shoulders. It's just got a lot more messy. We didn't get the commitment just yet. Yen pairs do look like they're still getting a bit of long in them. Obviously, we just have to evaluate carefully, but it is what it is for that. GBP CAD, very nice actually. So we have this 1, 2, 3 structured approach, equal spacing into the hook point. Didn't quite get it with a near miss. However, we did impulse away. We had this corrective squeeze, we impulse broke it, and now we just have to look if we're going to get continuations to the downside. We will have to always be aware that there is an obvious near miss there. So we could push down even to about this point here where the inflection point started, fill this 90%, and then maybe even gravitate back up. We have to wait and see, but then looking at this in an evolved structure, this could then develop into its own little piece of structure, and then we evolve forward from there, and then we look at it like this. So price can come into here, make its way back up, create a final internal structure there as well. It is what it is, but for now let's just keep it plain and simple. We don't have to look for it to tap into that exactly. We just know it would have been nicer if we sold from that point, and that's mainly it. New Zealand CAD. Now this one is interesting because we came up here in a structured approach, we tapped into it. As we tapped into this with the structured approach, I mean, it's not the cleanest, I'll be honest with you. You know, we had this, there was the push up, but there was a really nice flag here, which I think there was massive lessons in here for myself as well. But yeah, there was definitely this trade here. You could have refined it a little bit smaller. But yeah, that was more than enough. 18, and yeah, you'd be running roughly around about right now you'd be currently about floating 5-ish, but you'd be around about 7-6 down there. So you could have easily been out the market by now, protecting your account, but understanding that this has a lot of room to sell off right now. So hey ho. I think coming into this area here is where I'll be looking to exit the market, because we could look for larger flag territory. So I think being aggressive with price over here makes a lot of sense. Euro GBP. So this one's actually really nice. So we have this larger expanding. There was the internal structures and so forth, but now we've actually just come into the bigger picture. It makes sense being at this inflection point over here that we're creating this larger flag. There isn't any sort of very significant liquidity point that we could gravitate to, except maybe this liquidity point here, but it's a bit far away. Right now we have the 1, 2, 3, 1, 2, 3 into this. You could take the risk entry, but it comes with a massive amount of risk, and I wouldn't do that personally, because you risk the price just pushing up, pushing back down, pushing back up, pushing back. I would wait for a clear entry right now, where price just impulse pushes through and then creates a little bit of like, doesn't have to be that big, but pushes through this. We get a clear impulse on the higher time frame, the 4 hour, where we can see prices retracing. I think it needs a bit of time really. Only reason I say that is maybe because it needs to shape up with the higher time frame structure. So that when you look at the 4 hour, it's not just a massive wick. It's like, okay, we closed above here, then we pushed back down, closed back down here, and then we're on our way back down. That makes a lot of sense. And then we can move in sequence, which is what I'll be looking for. So if we do move to this downside, there could be a lot of opportunity. And then if we zoom out, we can see that we could actually be starting the move to come all the way down here. So I would stay very, very sharp with that, because it could turn out to be a very, very interesting play. USD CAD, I couldn't really say that I wanted to take a trade on this just yet. I think I'm more inclined to wait for it to come to this override or back down here for another trade. If I go to the 4 hour, we can see that price just, if that was the correction to go, it would have been good, but now we're just kind of correctively moving lower, and this would just probably just do something like that, and then all of a sudden do this, and then kind of just next thing you know, we're just in very corrective price, get to this point, and then we can just probably look for entries. Do you know what I mean? So you have to ask yourself, like, when price is messy, do you really want to be putting your risk on that, or would you rather wait for something else which is cleaner? And I think 9 out of 10 times when you get a level of more experience, you'd wait for something a bit cleaner. We have USD yen. Now USD yen is actually pretty good. It makes sense why we're getting a pullback right now. Okay, we're getting this pullback over here because we need to basically accumulate more price in order for us to continue in this run. I think this could be a very strategic place for us to place ourselves. It's not the best sort of formation, but we have a little inflection point over here, right? And within that inflection point, we had a little bit of liquidity sitting there, and now we're getting this sort of larger flag. There was the aspect of this tinier flag, but it does make sense in the higher time frame structure picture that we would see something larger. Would I opt in for a risk entry? Probably not at this point. If there was more structure in here, equal spacing, yes. But overall, this is very corrective, and I can't personally say that this sort of price is jumping out to me. So the reason for that is I think I'm going to be waiting for a clear push up and a push back down. I will just grab these little... Could be something like that for sure, but I would want it to be clearing this sort of corrective trend. So something very simple and easy where we just kind of tap into the high, maybe we push a little bit above and then we reject, create school. Sorry, I had a really interesting evening reading and forgot to go sleep, so usually I time myself while I'm reading so I know when to go sleep. I kind of just read for ages, so I'm a little bit knackered, but we're coming up in that flow state. You know, we're doing everything we need to do. Still got a lot of stuff to go through today, so it's still going to be a pretty good day. But yeah, overall, just going to wait for that to push up, push back down, get the flag. Euro New Zealand. Euro New Zealand as well, very similar. We have a very nice high value area over here. We've correctively come back with equal spacing. I think this is going to be a 10 out of 10 trade, but time and time again I always say this, you know, you could have everything line up and it can be perfect, but it may just not shape up. That's why you need to understand your trading criteria very carefully, because, and your management, even more important, because you can get into this trade, you can sell, and then maybe something can happen over here and it develops, becomes a little bit more complex. You didn't quite understand what was happening. You get tagged out, tagged in, tagged out, tagged in, tagged out, and the next thing you know, it drops off. And then you're thinking, why didn't I think of that? So I will be waiting for the insurance entry with this current price action. However, if we do start to create something a little bit more complex and it takes another week to develop, I'll evaluate it then, but it is looking like it's going to shape up very well with the higher time frame. Kajen, I think it's near enough ready now. I think I'm just waiting for the final few little candles to close. I will be looking for this corrective price to just be broken, so essentially be looking at it like this, let it do its thing, let it impulsively break through, create continuation, and I'll be looking to go to the downside. Patience is very key on this one. I think, you know, when you are looking at a trade like this, you don't want to rush it. Honestly, you don't want to rush this type of trade. This trade could shape up and be very profitable. It could easily clear you 10, 15, 20%. So that's one thing. Obviously, we have to understand there is a near miss to this high, but in the sequence of things, we are moving to the downside. So, hey, this could be a very good place to be positioning ourselves for a good trade. Even from the top to bottom, it's a massive amount of size. Yeah, you're looking at roughly around about 184 pips. If you're looking at 10 pip stop loss, you could potentially be somewhere in the realm of 18%. So I think I'm right, 18%. So it's still pretty good, but obviously that's talking top to bottom. And obviously there's more if it does push further, which we are looking for. This one will need a bit more time to kind of get there. I will leave it. I don't think it's going to be much to really worry about this week, but I'm waiting for it to come back up to this zone. If we do somehow get here, that's when I'll be looking to get scaled into that. And then GBP Swiss. GBP Swiss was nice. This was the missed trade I had. Hey, it is what it is. So we had two trades over here. We had this on Friday, which obviously we saw the structure play out. Then we forecasted on the Monday. We was waiting for a small tight flag, which we got. You could have taken it on the reduced risk, or you could have taken it on the risk. Me personally, reduced risk was fitting my criteria perfectly well. And yeah, simply 7 would have been your best bet, but I'm still not a bit comfortable taking 7. I'd probably squeeze in 10. And then yeah, so we did pretty much drop off. I mean, I did contemplate this and I said, okay, you could have been running around about 4%. You would have probably locked in around about 2-3, so you would have been at the market. But let's just say that, you know, for understanding what was going on, this ran into around about 18%. So we understood this on a larger scheme, and yeah, you know, that turned out to be a very interesting trade. And even though you didn't get this bigger flag, you got the one that's came into the run. So you know, that was very interesting. There was more trades in here as well, which I'm not really going to go through and analyze because I wasn't interested in a lot of these trades. Some of them could have turned into a break even, so forth. But overall, it was really good. So yeah, that's basically it for my watch list and wildcards for this week. I think there's a lot of stuff happening. I think my main watch right now is Euro GBP, GBP Aussie, GBP CAD, CAD Yen, USD Yen, and Euro New Zealand. Those are the ones that I'm really focusing on, but they need a few hours, if not another day, to develop. It is what it is. I did feel a little bit annoyed that I took a loss yesterday, but then I quickly got over it, understanding that it's probabilities. And basically the trade I took was on GBP. Hold on. Oops, not currencies, watch list. I think, yeah, it was Euro GBP, and essentially I had this bit of structure I was eyeing up. So I was eyeing this up as an expanding down here, and just basically in continuation, just trying to separate patterns. So then you had this bit of price where it was its own structure. Oops. So we had this bit of price which was its own structure, understanding that this was always a possibility, and then we had this expanding, which it could have just pattern separated and then gone with. So then I drilled into the 15 to just kind of see it a bit closer, and then we had this retrace over here, and then it was at this retrace over here where I was like, okay, I understand the risks that come with this, I'm going to take that. And it was roughly around about there. I think I did get in a little bit closer because I remember putting in 10, and it ran to about 0.8 for me. Ran to around about 0.8, so it would have been somewhere around about here, and that was about it. Oh, anyway, yeah, it was somewhere around about here anyway. So it ran to about 0.8% when I saw it. It might have tapped into about 1%. I should have moved into break even, I guess, but I left it and then it just took me out, and it is what it is. I think on a different day though, if this obviously was positioned differently, I would have, you know, really been interested in it. But understandings and expanding, I've taken quite a few losses on expandings, and I think, you know, the insurance entries turns out to be the best entry on these for me. So, you know, in the future, I think, you know, this sort of trade over here, where let's say we reject, we cleared this price down here, we came in, we pushed, and then we had that little flag over there with the clear, you know, 1, 2, 3 in that, I think that would have been a much better trade. So I guess, you know, that's what I said, there's a lesson there in that loss for me, to just kind of just go with what I want, because I had the expanding there. I think the retrace on that expanding is definitely not a trade to go with. The 5-minute refinement as well is there. I think, yeah, it's different for everyone, honestly. It's one of those. But yeah, I guess, you know, sometimes you get them, sometimes you don't. It is what it is. Sometimes you can read into something too much, and I think that's what happened for me. I just kind of read into this too much, and then I just went with it. But I'm up on my account, so I think taking that high risk trade there was something that I was comfortable with doing, so I'm not really too bothered about it. But I think, you know, when you're significantly down on your account, you don't want to be taking such high risk trades. So yeah, overall, that's basically it. So kind of just going back to what I said at the beginning of the video, I'm going to be making less content, but more better quality content when I do release it. Perhaps maybe I will still release some videos on a daily basis, but I'm thinking more off the technical side and more on the mindset and the growth side, because I think for a lot of the people who watch these videos, they don't realize as well that the technicals are actually extremely easy once you start learning them and you start understanding them. But the mindset is what's going to take you a long time to conquer, because you have to really work on that inner work. So I think for that reason, I think I'll kind of just go into my progression within the psychology side of things when I do talk about these videos, because I think there's more value in that for you guys. So yeah, overall, thanks for watching guys, and I'll catch you guys in the next video.